Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi, this is Shiraz Mian with the Top Stock video. Joining me this week will be Brian Hayes, who manages the Headline Trader and Income Investor newsletters for us. The stock I've picked is Prologis, ticker PLD, an industrial REIT. In fact, a leader in the e-commerce distribution fulfillment side, and the company Prologis has a very strong position in this part of the business through its assets in these major North American coastal markets that are hard to get, which provide a competitive edge to them and barriers to entry to new players. The reason I like it, particularly for those of you who have a longer holding horizon beyond the next 12 to 18 months, is the recent pullback in the stock. And the stock has pulled back not because, as is typically the case with REITs and other high-yielding equities, being under pressure during a period of rising interest rates or Fed tightening, but rather what Amazon said on its last earnings call. And Amazon mentioned overcapacity in its business, which confirmed some of those market fears about Amazon and other COVID winners having benefited from pulled forward demand over the last 2 years, which needs to be accounted for going forward, meaning through relatively slower top-line growth. And as you all know, Amazon was really punished hard after that announcement. Prologis moved in solidarity with Amazon. Prologis, as I mentioned, is a leader on the distribution side of e-commerce, and Amazon is a customer, as are many other traditional operators, the Walmarts and the Home Depots of the world. The stock is currently down more than 25% from its late April high, which in my judgment has created a very attractive entry point for those of us that have a longer holding horizon. Now, I'm not suggesting that the Amazon news and the potential for slowing growth over the next few quarters doesn't matter. It does. And it's possible that with Amazon, as well as with PLD and others in the space, there may be some more downside risk as the full extent of that deceleration becomes obvious in the market. But what I like about PLD, and also about Amazon for that matter, is the long-term outlook. The case for e-commerce growth in the long run is a given. There's no question that traditional sales are moving, a big part of traditional sales are moving online. This was a pre-COVID phenomenon, which got a boost during COVID, is normalizing now, but is expected to get back to the trend line beyond the next 4, 6, 8 quarters. So if you have the capacity to hold on to PLD while that news trickles in, then I have no doubt that you will be a winner and come out ahead with this stock significantly higher. I have no doubt that the stock will not only recoup what it has lost, but build on that. Valuation is very attractive. It's currently trading, I want to say, around 21 times on the traditional cash flow metrics that the analysts covering PLD and other REITs prefer to use. That's about 33 to 35% lower than where the stock was about 5 months ago. So a significant compression in multiple. And while you wait for the business to return, PLD will pay you an attractive 2.5% dividend. They have a fortress balance sheet, generates strong cash flows, which should not only give you plenty of security about the dividend, but will continue growing as well. And that strong cash flows also is at the core of PLD's ability, Prologis's ability to continue investing in its own business and also make opportunistic acquisitions, as the proposal to buy Duke Realty recently tells us. I don't think, though, that the Duke Realty deal will go through, but it's an example of how the company can leverage its financial strength to further bulk up and consolidate its position in the space as it waits for the business to really turn around. So a low risk way, an income way, a relatively low beta way of playing the long-term positive outlook for e-commerce. Just a brief comment on the low beta side. It's lower than the market, so it gives you, the beta is lower than the market, so it gives your portfolio valuable diversification elements, which in these uncertain times is definitely a useful attribute. So just to recap, Prologis PLD, a long-term play on the positive, favorable outlook for e-commerce. I'm not recommending it for short-term tactical reasons, but rather the positive attributes of the business, the well-run company, and the long-term outlook for e-commerce. With that, I'll pass it on to Brian Hayes.
Thank you, Shiraz. My top stock pick this week is Kronos Worldwide, ticker symbol KRO. Kronos is a global producer and marketer of titanium dioxide pigments. Titanium dioxide is a naturally occurring oxide of titanium, and when ground into a fine powder, it transforms into a pigment that provides whiteness, brightness, opacity, and durability for products like paint, coatings, plastics, and paper. Now, nature does not yield titanium dioxide in a usable form. It must be carefully mined and refined, and Kronos uses chloride and sulfate processes to achieve this. Through its distributors and agents, Kronos sells its products to over 4,000 domestic and international paint, plastics, and paper manufacturers in approximately 100 countries. The company was founded all the way back in 1916 and is headquartered in Dallas, Texas. So that's a bit about the company's background and services. Let's shift gears a bit and take a look at its industry group. I always like to start with somewhat of a top-down approach and examine the characteristics of leading industry groups. I often say that stocks are like animals in nature. They tend to move in groups, and if we can identify which groups are outperforming the market, it can really make our job easier in terms of identifying which stocks are outperforming the market. I'm constantly examining the top industries, and when you do that, you start to notice individual stocks in certain industry groups that are making new highs almost daily. And these are the industry groups I like to focus on to narrow down my list to the stocks with the greatest profit potential. Quantitative research suggests that approximately half of a stock's price appreciation is due to its industry grouping. And Zacks has performed several proprietary studies that illustrate this phenomenon. So focusing on the top industries provides a constant tailwind to our investing results, and it allows us to not only narrow down our list of stocks to buy, but also provides us with a list of stocks with the best profit potential. So Kronos is part of the chemical diversified industry group, which currently ranks in the top 25% out of 253 industries. We can see that the group has returned just shy of 1% this year, while the S&P is off about a little more than 12% as of this past Friday's close. And digging a bit deeper here, take a look at all of these Zacks rank number 1 and 2 stocks located within this group. This serves as another confirmation that stocks in this group are experiencing positive earnings estimate revisions, which we know is the most powerful force impacting stock prices. Stocks in this group are performing well. One company that many of our viewers are likely familiar with is Dow Chemical. Dow is up about 25% this year and is also outperforming the market. So we can see the power behind locating leading industry groups and the tailwind that it provides. Also note the favorable valuation and EPS growth characteristics with this industry group. We can see the group is relatively undervalued and has above average projected earnings growth. As we can see, Kronos is currently ranked as Zacks rank number 1 strong buy. The stock is ranked favorably by our style score categories with a B for value and growth and an A for momentum, paving the way for an overall B VGM score, indicating that there's a strong likelihood that Kronos momentum will continue on the heels of strong sales and earnings growth. Kronos also pays a 76-cent dividend, which translates to a very respectable 4.07% yield. Kronos has exceeded earnings estimates in 3 of the past 4 quarters. The company most recently reported first quarter earnings earlier this month of $57.5 million or 50 cents per share, which translated to a 78.57 positive earnings surprise versus the 28-cent consensus estimate. And this compares quite favorably to the 17-cent per share earnings that Kronos delivered in the same quarter of last year. Net sales rose 21% year over year in the first quarter to $562.9 million, which were driven by higher titanium dioxide selling prices and volumes. Kronos has posted a trailing 4-quarter average earnings surprise of 24.02%. So they've been consistently beating earnings estimates lately, and the stock price is reflecting this. Kronos is up about 26% this year, while the general market has been in correction mode. And even with the recent price appreciation, Kronos stock is still relatively undervalued, as we can see here, relative to its industry group. Looking ahead, earnings estimates for this year, as well as 2023, have been skyrocketing. In the past 30 days, fiscal 2022 EPS estimates have increased by 60.94% to $2.06 per share, which reflects a 110.2% growth rate relative to last year. So it's obvious the growth is there and looks set to continue. So Kronos Worldwide, ticker symbol KRO, is my top stock pick of the week. Make sure you subscribe to get all of our top stock picks. We bring them to you here every week on Zacks.com. Tune in next week for more of our top stock picks.